You know, I've been in crypto for a long time, and there are very few times that I can say I'm 1,000% sure, or that I'm the most bullish that I've ever been, or that the price is still dislocated from the fundamentals by a country mile. And here I am sitting here on a green day like this, and I can truly say that last night somebody asked me about the industry, and I said to him, you know, this is the period in time where the price and the fundamentals are the most disconnected, and I suspect that the market's absolutely about to explode. Now, we're seeing that happening now, and I really just think that this is the beginning of a massive explosion. And I think the biggest custodians for this explosion are going to be ETH, are going to be certain ETH and other plays, which I want to talk to you about today. So in today's show, what I want to do is I want to show you why I think that I'm 1,000% sure, why I think the price and the fundamentals are so disconnected, what's happened in the last 24 to 48 hours that's given me this thesis, and then I'll show you which tokens can actually benefit from this. So if you're in for a bullish show, like only if you're in for a bullish show, I think you're gonna have the time of your life here today. And if that sounds good to you, then let's get the show on the road, guys. You know, being in crypto for a long time makes you a skeptic. Like you don't trust pumps, you don't trust narratives, because you know that every time that you have done that before, it's come back to bite you. But here I am, and I'm literally putting all my conviction in saying, like, this is the most bullish that I've ever been. I'm going to show you exactly what the thesis is as to why I'm completely bullish. Josh, what happened to my little balls that I had with me? I think on my desk. Or Josh, will you get them for me? Anyway, so that's what I want to discuss today. I really want to talk about why I'm so bullish, what happened the last 24 to 48 hours. At the end of the show, I'm also going to do something crazy. And yeah, I think you guys are all going to be the beneficiaries of whatever the something crazy that I'm going to do. I'm going to see if I've got the guts to actually do it. I'm going to do a James win. That's what I'm going to do. And I'm actually going to give away the proceeds of the James win. If there are proceeds from the James win, I'm going to give them to someone that's here in the chat. All right, so let's get the show on the road. All you guys need to do is subscribe to the channel and like the video. I'll do the rest. I'm back in the studio today after an amazing trip to Hungary. I'm back here. I'm bringing you crypto love, crypto wisdom. I feel more comfortable. I've got all my screens and everything else. And I mean, yeah, let's get the big like for. Is that 𝗙𝗘𝗔𝗧𝗪? That 𝗙𝗘𝗔, that's Andre. It's not that guy. Yeah. All right, let's just look at the bubble. So, I mean, the bubbles are pretty much telling you a picture. You can see the tokens that are the ones that are moving now. Those are the ones that are the custodians of what I'm going to be talking about today. That's the top 100. Top 200, you can see, oh, look at Axelar. Axelar absolutely flying. So for those of you who don't know what Axelar is a cross-chain protocol. Reason why Axelar is actually flying today, two reasons. One is they've got a partnership with XRP, but also you can see, as you can see in Josh's amazing newsroom that he's actually built us, they were listed on Upbit. So now they're trading on the Korean exchange. And you can see you got that pump. You got like 100% pump in Axelar. You got Aerodrome up a lot, which is something that I'm going to be talking about today. Lots and lots happening. 𝗙𝗘𝗔𝗧𝗪 slightly down, but I think their speed test is happening, I think, tomorrow or the next day. So it's going to be pretty big. All right, let's talk about what's actually happening and why I'm so bullish. In fact, probably the most bullish that I've been in a long time. And to be honest, it's got nothing to do with like price and chart fundamentals. I mean, even though like when you look at the charts, yes, I know, I've seen it. Everybody's told me about it. There is a head and shoulders, which is playing out here. So like that's a shoulder, that's like the head. And then there's another shoulder playing out here. And if that head and shoulders happens, yes, I do believe we're going to get a breakout. Everyone's talking about it on Twitter. It is true. It is happening. Even Josh, when he looked at this head and shoulders earlier yesterday, said, that's quite an insane head and shoulders, right, Josh? Yeah, he said, sure, it's insane head and shoulders. That's not the reason why I'm bullish. The other reason why I'm bullish, but that's also not the main reason why I'm bullish, is because I don't know if you guys have been paying attention, but there's so much firepower now ready to buy Bitcoin. There's so many companies out there that are going out and raising money to buy Bitcoin. And every day, a new one of these companies actually launches. And you can see it over here. Just this is a tweet from 𝗦𝗫𝗎𝗪, who says, you got MicroStrategy, CP, ASST, SMLR, NACA, DJT, plus all the others that are all raising money to buy Bitcoin. And this is 76 billion in capital raising ability. And that 76 billion in capital raising ability, which is, by the way, already approved, is all going into Bitcoin. It's like they can only raise this money for Bitcoin. So it's 21, which is CEP, it's Strive, it's Nakamoto, which is David Bailey's new vehicle, it's Trump Media with their, I think, 2 billion or 2.5 billion MicroStrategy. You got Semler Scientific. But so there's a lot of buying pressure that's actually starting to happen, but that's not what's making me bullish. What's making me bullish is what's going on in the United States. And you can actually see it in the charts. Like you can see that the buying pressure that is coming from the US. And you can see that when you look at the data, you look at the Coinbase premium. See, that's where the Coinbase premium is at the moment, this green line over here. What the Coinbase premium is telling you is that the buyers, that the action is now happening in the United States. And this is the part that's actually got me excited because, yes, I know Trump came into power. Yes, I know Trump promised us a strategic reserve. Yes, I know he started putting all the pieces into place. He gave us a crypto czar. And the crypto czar told us that he was bullish on stable coins.
Stable coins really have the potential to ensure American dollar dominance internationally, to increase the usage of the U.S. dollar.
So it's not about all of this, but what it's about is it's about all the pieces actually coming together. And so, like all that's happened between the time that Trump is coming to power, promises made, promises kept. What he's done is he's actually put together an infrastructure. And now the fundamentals of that infrastructure are in place. And now the results of all these efforts that Trump has done and everything that's happened are actually starting to play out. And they're starting to play out in our favorite tokens. They're starting to play out in a whole lot of other things. And so I want to show you what's basically happened, because in essence, what we have seen is we've seen an administration go from this.
Hucksters, fraudsters, scam artists, Ponzi schemes, the public being left in line at the bankruptcy courts. We've seen this story before. Hucksters.
So we've gone from that administration over there, that guy who I don't miss at all, whose name I shall not mention, to a new SEC chair. And this is the difference in tone between the old SEC chair and the new SEC chair.
Another core feature of blockchain technology is the ability of individuals to have self-custody of crypto assets in a personal digital wallet. The right to have self-custody of one's private property is a foundational American value that should not disappear when one logs on to the internet. I'm in favor of affording greater flexibility to market participants to self-custody crypto assets, especially where intermediation imposes unnecessary transaction costs or restricts the ability to engage in staking and other on-chain activities.
So we've gone from a hostile SEC and we've gone to an SEC which is now not only, should we say, friendly to crypto, but actually promoting crypto. So we've gone from, we don't want anything to do with crypto, we don't want anything to do with blockchain, it's all about fraudsters and whatever else, to an SEC and to an administration which is basically saying to us, not only do we want it, but we actually want to promote it. We acknowledge your right to DeFi. We acknowledge the difference between a protocol and a company. We acknowledge the fact that it's a piece of software. We acknowledge the fact that you can all use self-custodial wallets to store your thing. He said privacy and self-custody is your right, and he's not about to take away your right just because you're moving onto the internet. And so we've literally had this revolution. And I think the final piece of the revolution that was missing was to get the SEC chair, Paul Atkins, to actually come out and actually make a whole lot of statements. And that's exactly what he did. In fact, yesterday there was what CZ's calling DeFi Day. So it was the 6th of the 9th, and they're calling it DeFi Day. Now, DeFi Day was effectively an SEC roundtable where they came out with a whole lot of statements. And I'm gonna bore you with the details of the statement, but in a nutshell, what they said was that the American values of economic liberty, private property, and innovation are in the DNA of DeFi, and they're not about to take that right away from people. The previous administration discouraged Americans from participating in blockchain by asserting through lawsuits, speeches, regulations, and regulatory action And now they actually want to encourage this. They want to encourage staking. They want to encourage people to do DeFi. And I mean, of course, the reason why they want to do this is because they understand that if America wants to remain if America wants the dollar to remain the stable currency or the reserve currency of the world, it has to be the reserve currency of Web3 and has to be the reserve currency of the internet. And so you now have an administration which is actually promoting our rights. And yesterday was a massive, massive, massive pivotal day. I'll read you just some more key points. So as I said before, DeFi embodies the American spirit, economic liberty, property rights, and open innovation. He said explicitly, mining, validating, and staking as a service are not securities transaction. No more hand waving. He's basically said he defends the right to self-custody and he defends the right to open source devs. DeFi protocols didn't blow up. CeFi did. He acknowledged that yesterday. He said he realizes that none of the DeFi protocols actually blew up because he really spoke about the fact that DeFi was actually pieces of software. I'll actually show you the thing in a second. So with all of that coming, what effectively he has done is he has ignited a run or a massive boom, specifically in a couple of sectors. And I want to talk to you about the sectors. A lot of the sectors are pretty obvious when you look at the bubbles. If you look at the bubbles with a trained eye, you pretty much know that, look, everything's up today. But look at the things that are really up a lot today. So you've got Aave, which is up a lot. You've got Sky, which is Maker, up a lot. You've got Lido up 11%. You've got Uniswap up 23%. You've got the layer 2s up quite a bit today. So if you look at the bubbles, you kind of realize that something big is happening in the United States and the prices are actually starting to reflect it now. And this is not one of those narratives that I think is going to be here today, but is going to be gone tomorrow. And the reason why I said that is because if the US really, really, really has an objective of keeping the dollar the king of currencies, the real world reserve asset, then it's got to become the reserve asset of DeFi, right? And the truth is that if you want the dollar to be the reserve asset of DeFi, then what of the world, of the digital world, which is effectively the transactional world, or is going to become the transactional world, then what has to happen is you have to build all the applications that exist in the real world, you have to build them in the digital world. So what's not going to happen is you're not going to be in a world where everybody's transacting using stable coins like USDT, USDC, and a whole lot of other stable coins, but then they're going to take their stable coins offline and invest them in JP Morgan. That's not going to happen, right? They're going to take their stable coins and they're going to invest them in DeFi applications. And so I think we've come full circle here. I think we've come full circle. We've gone to the casinos, we've been in the meme coins, but now I think what's happening is we've come full circle. We've realized that the US has one objective in mind, and the one objective in mind is to keep this 𝗙𝗃, to keep this dollar, to keep this as the reserve currency of the world, because not only does that keep it the reserve currency of the world, but it also creates massive buying opportunities for US treasuries. And if you create massive buying opportunities for more treasuries, the US can actually land up borrowing more, thereby devaluing the currency, etc., etc. But what you're getting here is you're basically playing into the US's strategy. And by that I mean, if they want to keep the dollar as the reserve currency of the world, well, they're going to need to create a financial system that can accommodate all these digital dollars. And that financial system effectively is DeFi. And so now, as I said, we've gone full circle. We went all the way from the trenches. And you can see, I mean, let's just quickly listen to 𝗙𝗃𝗧𝗧, because he actually did say it.
And we are going to put a lot of thought into the stablecoin regime. And as President Trump has directed, we are going to keep the U.S. the dominant reserve currency in the world, and we will use stablecoins to do that. Thank you.
So they're very serious about it. And the last thing that you want to do is actually fight against them with this, because they've got a much, much, much bigger agenda. And so now what's going to happen is, or what's happening is, we're getting a move away from the trenches. We're getting a move away from the trenches and the casinos, and people are going back into quality, and people are going back into DeFi. And today what I want to talk about is I want to talk about who the custodians of this are, because I don't think that this is going to be one of those short-term narratives. this is a narrative that's going to happen at least for the next 4 years while Trump is in power. And I believe that once that happens, we're going to get this happening for a long, long, long time. In other words, I think this DeFi narrative is going to be there for a long time. So these are tokens that you're not actually buying now for whatever the price is now. And also that when you look at the tokens, you say, okay, hold on, but these tokens have already moved 10, 11, 12% today. We're not looking at the 10, 11, 12% today. We're looking at the promise of what these tokens promise to be, what people expected these tokens to be actually playing out. So like, for example, if you look at this chart over here, we could just take you to this chart. This is the Uniswap chart. And if you go back in time, you can see that people had really, really, really high expectations of what Uniswap was going to be. And now it's back down at $8 from a high of $50. Okay, so it's up 10% in a day. But I'm not talking about short-term moves. I'm talking about moves which are going to take these DeFi protocols well past all-time highs. And so I really want to talk about which tokens they're going to be and what the custodians are going to be. So let's start off at the beginning. And I think the biggest custodian of this, and I never thought I'd actually say this, is actually Ethereum. So Ethereum right now is the biggest custodian of this DeFi pump. And the reason why Ethereum is the biggest custodian of this DeFi pump is because, as I said, we've come full circle. And in the beginning, when we developed the smart contracts and when we developed the smart contract blockchains, they actually developed the smart contract blockchains for decentralized finance. That's why they developed the smart contract blockchains. The biggest application was supposed to be DeFi. And so all the massive applications actually landed up being built on ETH, right? And so, I mean, look, ETH's had a very, very, very tough time, as we know, in the past. But you can see that now ETH's had a little bit of a breakout. I showed you yesterday that Bitcoin had a breakout. Now you've had ETH having a breakout out of a downtrend that it's been on, or a flag that it's been on since the beginning of May, so since about a month ago. And now we're having a breakout on ETH. But as I said, like, this breakout on ETH is like, I mean, yeah, it's a breakout, but just want to show you how much more there is actually that ETH can actually run. Because if you look at June 2021, the Bitcoin price was 33,000 and the ETH price was $2,500, right? And if you look at June 8th in 2025, 4 years later, the Bitcoin price was $108 and the ETH price was $2,526, which means that either ETH ain't gonna work and ETH is dying a slow death, or that ETH got a lot of catching up to do. Now, in the past, I probably would have said to you, okay, look, you know, like probably I wouldn't be I wouldn't be deploying a lot into ETH. But ever since the US has become so DeFi friendly and the SEC has become so DeFi friendly, I think that the thesis is that you actually can't afford not to have some ETH plays in your portfolio, and we'll talk about those. And you can kind of see that this pattern that I've showed you here actually played out in the ETH BTC chart. But even with the ETH BTC chart, you've had a slight breakout. And so it could just be that ETH's in the recovery now. So if you look at like ETH quarterly return, so far the ETH quarterly return, we had a very bad quarter last quarter, but now we're catching up and it looks like maybe the worst is behind ETH. I mean, funny, this is a stat which is, I don't actually know how to read this stat, to be honest, but he says, did you know that ETH is closer to its all-time high than Solana is? Which means that Solana basically got smashed quite a bit and now hasn't yet recovered. ETH got smashed, but ETH also never had such a big run. So yeah. Also, if you look at the ETH ETF flows, I mean, just look how many positive days we've had since the 22nd of May that you can see on this chart. All these days have pretty much been positive. Inflow after inflow after inflow after inflow. From an ETH staking point of view, more people are staking ETH now than have ever staked ETH. And I think that number is about to increase even more. And the reason why I think that number is about to increase even more is because we know that the next phase is for the ETH ETFs to actually be allowed to get staking yields. And so, you know, we know BlackRock actually spoke to the SEC about this, and BlackRock and the SEC have discussed, and there's been various other discussions around allowing the ETH ETFs to actually stake. Now, it sounds like a small thing, but it's actually a massive thing, because the one thing that Wall Street love more than anything is yield or dividends. Like, that's for Wall Street, when you say the word yield or when you say the word dividends, that's like a massive gain for them. So even though, like, you think to yourself, okay, it's only like a couple of percent, 3, 4, 5, 6%. It's not that. It's the fact that now Wall Street have an instrument that they're familiar with, which is a yield generating asset or a dividend generating asset. And so that's quite big. So I think that the biggest custodian of what Paul Atkins did yesterday is definitely going to be ETH, right? And you can also see the validator queue. Now, there's a queue. Usually there's queues to actually get out of the validators. Now you can see there's actually queues to get into the validators. People are trying to get in to actually start validating more ETH, more nodes, more secure network, etc. So overall, I must say that the overall health of the ETH network really, really looks good. And it doesn't mean that this is the end of the Sol bag or the Hyperliquid bag or whatever else. In fact, it's the exact opposite. Because ETH is the run. ETH is the trigger for alt season. It's always been the trigger for alt season. This time, we haven't had an alt season. But in every other cycle, ETH has always been the trigger for alt season. First, it's Bitcoin. Then the Bitcoin money flows into ETH. And then that flows into large caps, which is Solana, Hyperliquid, etc., etc. And then we go all the way down. So regardless of whether you hold ETH or don't hold ETH, like ETH or don't like ETH, what you have to be bullish about is the fact that we're going to start moving down this risk curve. And you can't, I mean, we've hoped, but we haven't actually been able to do that this period. You haven't actually been able to run out the cycle and to actually get that alt season, because there haven't been capital flows from ETH down the ecosystem. And so I think now what we're starting to see is the very, very, very beginning of an ETH run. And I suspect that probably from this point on, if you think about like this point on for the next, like, I don't know, 12 months, probably ETH's going to give you like maybe superior returns to Bitcoin. I think the only thing that's holding me back from saying definitely is because we're still waiting for quantitative easing. And until then, you really can't be sure. But once ETH starts going up, what you do know is that the Bitcoin dominance will start dropping. And when the Bitcoin dominance actually starts dropping, that is effectively the beginning of the real alt season. So you kind of want two charts to play. You want the ETH BTC chart to go up. That'll push the Bitcoin dominance chart down. And that really begins the beginning of this whole alt season. Okay, so now if we believe that the market is going to run, which I think we all do, and we believe that the United States is playing a massive part of it, and that there's going to be this massive alt season that eventually lands up coming up. Okay, how do you position yourself? So obviously you want to be positioned in everything. You want to be positioned in meme coins and DeFi and whatever else. But the truth is, the one narrative, which I think is a very, very, very safe narrative, and a narrative that you all have to have in your portfolios, if you're holding long-term portfolios, is that you have to have some DeFi bets. Yes, these DeFi bets are not going to 100x. This is not your meme coin bets. But if you're building a solid long-term portfolio, I would say that now you have to have DeFi bets in your portfolio. There's a reason why I say this. In every technology cycle, what you get is you get charts like the Uniswap chart, which is they first launch and they fly. And the reason why they fly is because they fly, these tokens fly, these technologies fly. This happens with every technology, right? First, the technology launches. Then the technology goes up, overextends itself, right? And the reason why it overextends itself is because at this point in the curve, people are imagining what could happen if this is successful. And this happened, if you think about the dot-com bubble, the same thing happened in the dot-com bubble. Pets.com and all these other guys went all the way up and they all collapsed. Why? Because at this point, this is a chart of the representation of what would happen or what could happen if all of these plays come into play. But then the reality sets in. There's no regulation. These things don't actually work. The rails are clunky, etc., etc. And then we go all the way back down and we go down. Some of these protocols actually land up surviving. And those that land up surviving this first cycle typically go on to actually really, really, really revolutionize industries. And you can, if you go back, and I don't actually know if we can go back this far. I don't know if we can actually go that far on Google. I'm not sure we can. Let's try. Let's go back years. Let's go 12 months, and let's go see if we can go back to you see, you can't go back to 2001. But if you could go back to 2001, you'd pretty much see that, and then you'd see these things actually pumping. Let's see. Is there anywhere else we can? There's probably nowhere else we can look at it. Let's see if we can see it on Amazon. Probably not. Probably this doesn't go back far enough. Okay, so here we go. So you can kind of see here. Let's see if we can go. You see, we had this. If we can go monthly, maybe, but monthly. Let's go 6 months. So you can see you had this over here. You had this little thing over here, which this is where we had that, like, what this trough of disillusionment almost. And then we went down again, and then we started to recover. And so now what I think is going to happen is, initially when these DeFi protocols actually launched, I think everyone thought that they were going to change the world. Then they realized, look, there's no regulations, government don't understand them, people are never going to use them, people are never going to use stablecoins. But now we're coming to the second part of the cycle. And the second part of the cycle says, now there is regulation. Now there is stablecoins. Now these protocols can actually start getting used. And so I think DeFi is in a very, very, very unique position to actually capitalize on that. That plus the fact that the US wants to build the US dollar as the reserve currency on chain, basically cements for me the fact that these are probably some of the best long-term things that you want to have in your portfolio. And so that is why you can see that the DeFi mindshare has actually been happening very much. People are going back to fundamentals. People are saying, look, the casino was nice. It was amazing. When Bitcoin was moving sideways and we didn't have regulatory clarity, we went to the casino because that's where we could get our returns. But then we got regulatory clarity, or we're getting regulatory clarity, and we're starting to position ourselves. We're starting to position ourselves in a place where in a place we want to capitalize on this regulatory clarity and on the fundamentals. And so what I think you need to do now is I think you need to actually just pick some of your favorite DeFi plays and just leave some of your money in the favorite DeFi plays. Now, you can go with the big DeFi plays, or you can go with the slightly smaller DeFi plays. We made you a little bit of a spreadsheet. You know I love spreadsheets, but I mean, like for example, you can go with something like an 𝗕𝗵𝘃, right? Obviously, it's a big market cap token. So like, let's just quickly look at it. So right now the market cap it's a $5 billion market cap, $5 billion almost fully diluted market cap. These are established tokens. Most of their tokens are already actually in circulation, so you're not going to be drowned by VCs and stuff like that. And what you can see about 𝗕𝗵𝘃 is that it's actually becoming as big as some of the banks. Like if you look at, for example, if you look at the total assets under, or the total value of collateral, or total value locked, $41 billion. Now, for those of you who don't know what 𝗕𝗵𝘃 is, it's basically a lending and borrowing protocol. So you can basically come here and you can put you can, for example, supply your ETH and get 1.93%, or you can actually borrow. You can actually borrow at these rates. So it's a lending and borrowing marketplace, which is effectively a bank, right? And so that, I mean, if you think that there's going to be a massive stablecoin market, well, where are people going to deposit it? What are they going to do with all their money? So that's one of the things that you'd need to do. One of the places that you can look at. You can look at things like, for example, ETHIFY. I keep talking about ETHIFY, but it's this whole restaking narrative, right? But these guys are really making waves here, right? So they've got this credit card, or this card that everyone's talking about. So basically, you stake your assets with them, and they've got 34 million ETH. Is that right? 34 million ETH staked. Yeah, it is actually right. With them, and then they've got the card that everyone's talking about, this ETHIFY card and how you can spend with this ETHIFY card. So you want to start thinking, if the banks start moving onto DeFi rails, and they will, because the stable coins are moving onto DeFi rails, who's going to be the new banks? And that's the ones that you actually want to be investing in, right? You've got so another one that is very good is lending and borrowing on base, right? Because remember, when I talk about ETH, there's really two entry points onto ETH. The one entry point onto ETH is obviously ETH itself, but the other entry point onto ETH is actually through Coinbase, right? So some people will get onboarded onto DeFi via Coinbase. And so those guys are going to land up inevitably on the base chain. Some of them are going to go directly to the ETH chain. And you want to be able to get both. So the 𝗕𝗵𝘃 equivalent the 𝗕𝗵𝘃 equivalent on base, which is Coinbase's, effectively Coinbase's ETH layer 2, is 𝗕𝗏𝘃, right? And you can see that if you look at, you can actually see the total value locked. So 𝗕𝗵𝘃 has got, let's just have a look here. Let's say fully diluted market cap, active loans. So okay, let's look at it from an active loans point of view. I was hoping we could see it by TVL point of view. I think we can see that, yeah. Okay, no. Active loans. So you can see that 𝗕𝗵𝘃 has got $16.7 billion worth of active loans. And then number 2 here is actually 𝗕𝗏𝘃, which is effectively 𝗕𝗵𝘃 on base. So I think the thesis for me here is you need to start thinking about what happens when this entire movement actually moves onto chain, right? When the stable coins come and they move onto chain, what's going to happen? And you need to be buying those things. There's a lot of other ones. Like, for example, the one that I always talk about that I really think is you can always just buy this is Aerodrome. Why? It's the biggest DEX on base, right? So you're saying you want to be holding a bunch of these DeFi protocols. I mean, I'll give you some other ones which are slightly like more degen, if you want to call it that. So one which I'm a big holder of is actually Fluid. Fluid is a capital optimization DeFi platform. It's basically everything built into one. So it's a DEX. So I liked Masari actually wrote an article about it, and they broke it down. People said at the heart of Fluid is a liquidity layer which unifies liquidity across the DeFi protocols that are built on it, improving composability. So it's got basically everything in one, and the usability of Fluid and thereby their TVL has actually gone up a lot. The other one which I'm also a big fan of, and to be honest, I'm actually trying to buy this one, but I can't buy it because there's just no liquidity, is the one that Alex, our researcher, actually did a show on, which is FX protocol. Look, it's very, very, very tough to buy. I don't recommend you because I think there's no. Yeah, you can see it's up 20%. It's up at $91 today. It was at $50 when I spoke to you about it like a week ago. So it's very, 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 very tough to buy this one. But the idea is start positioning yourself in these DeFi protocols, because I really think that there's going to be a massive ETH narrative which starts exploding. And if you think to yourself that you're late, I just want to remind you that this is the beginning of the beginning. The stablecoin bull isn't actually even past yet. So yes, we may go down 5% tomorrow. We may not go down 5% tomorrow. I really can't tell you what's going to happen. But what I can tell you is that in the long term, these are tokens that you definitely want to have in your portfolio. All right, so that's pretty much the thesis. I did mention to you that I'm going to do something a little bit crazy today. I mean, yeah, Pendle's another one. Someone's saying Pendle. Pendle's a great one. Pendle is a top play. Yeah, here it is. It was one of the things that I want to talk to you about today. Is Pendle. Pendle's definitely a top play. Should I do something a little bit more crazy today? Okay, should I do it? Okay, so I have money in this account. Somewhere in this is my Blofin account. I should be able to, I think I should have some money. I think I have $5,000 in this account. What I want to do is I want to take an ETH position here. But this ETH position has a bit of a twist, right? So I'm going to take this ETH position at a 5x leverage, and I'm going to go in 100%. That's smart. So I should be getting about a $50,000 position, right? I'm going to be buying. I'm going to take a $25,000 position, and my liquidation is going to be 20% down, right, Josh? I put a $5,000 position in the $25,000 position. That's correct. Okay, so I'm doing it. Here we go. I've got that position here. We've got a 9.18 ETH position, as you can see. Or at least we've got an open order. Let's actually move that order. I'm taking this on this Blofin account. So let's modify this order. Shall we actually get it? Even though I think we'll get it anyway, but let's get it. So let's just go up a little bit. Because it's such a small position, you can actually just pay a bit higher. Okay, so here's what I'm going to do. Bang. Insufficient margin. Okay, hold on. Let's reduce the number of ETH we're buying. Okay, bang. So now we've got ourselves a $25,000 leverage position with a liquidation price of $2,188. Okay, so here's the story. I'm going to leave this account running. This is the story. I'm going to leave this account running. We'll check up on this account every couple of days, okay? It's a 25,000, it's a 9 ETH long position, $25,000 long position. Here's how this works, right? You guys go and sign up to Blofin with the link below. I'll show you where the link is. It's this link over here. Crypto Banter. Anyone that signs up from today will go into a raffle, okay, or a draw, okay. So anyone that signs up will go into a draw using that link over there. And in 30 days, so on the 10th of July, we will give away the full amount of money that is in the full amount of money that's in that account will go to one lucky user. Okay, it could be you. I don't know. If we get blown up, we get blown up. If we get James Wind, we get James Wind. But if we make it, someone's going to actually get it. On top of that, as soon as you open an account, you get a $15 USDT voucher. So as soon as you open an account, it's only limited. That's limited to the first 200 users. Voucher issued within 3 hours of registration. And you can use that $15 voucher to open up an ETH, any position, but you can open up an ETH position on 5, 10, or 20x leverage. So you can actually open up a whole lot of things here. Okay, does that sound good to you guys? Okay, if it does, remember, if you want, there is, let's just quickly look, where is our account? Okay, so we are already, and we're $20 in the loss. We're $20 in the loss. We'll keep watching this account, but you guys need to remind me. You guys need to remind me. You need to remind me. And if you want to win this account, we'll actually keep adding to this account just for fun. We'll keep adding to this account. So what you need to do, open an account on Blofin. Anyone that opens an account from the 10th of June to the 10th of July, we'll go into raffle and then we'll draw it and we'll give it away to one lucky person. Alrighty, on that note, I shall see you guys again tomorrow. No, wait, before we see you guys again tomorrow, we can just look at the bubbles again. Let's just have a look at what's going on here. Has anything changed? Oh, the research role. Okay, but I think we have a thing here. Hold on a second. Let's have a look here. Okay, and let's have a look here. Let's see what's going on here. Okay. Anything going on? Oh, see Arbitrum. So now you see now we're actually on the live bubbles. You see we're actually here on the live bubbles here. Okay. See all the stuff that's moving. Curve at 74 cents, Lido 94 cents. Get yourself into these ETH longs. Get yourself into these ETH longs. All right, I'll see you guys again tomorrow. Until then, trade well, my friends.